Welcome to Market Insight for the week of August 19th through the 23rd. Let's start with our top-down approach, starting with the higher time frames on the monthly. Monthly is continuing to push higher despite being overbought up there. In fact, I took the supply line off because it just wasn't helping us all that much. Monthly is pushing back up after pushing down a bit. And notice that it's trying to get back up above last month's close. In fact, the last 2 months, July and June, kind of clustered there on the closes, shortening of the thrust in the closes and on the highs. And this month, we're trying to get through that. So the monthly is pushing back up and trying to get back up above last month's close. Now, I note we have a lengthy bar here, right, this month. And often a large bar like this, high in the trend channel, signifies the presence of supply. It doesn't mean that the market's going to turn down from here, or even that the market can't close higher into new all-time highs. We're just noting that the presence of some supply, maybe it's initial supply that will later have an impact on the market, or maybe it'll be absorbed by the buyers. We don't know, right? We don't know what's going to happen, but we'll be able to tell from the market action, from subsequent market action, especially on the lower time frames. So we just note that the supply exists right now. And we also note the strong bullishness as well, right? We've got two things going on here, some supply and also some strong bullishness. Now, by the way, I say that a large bar here. Where does that come from? I'm seeing this here as a larger bar than what we saw on the pullbacks earlier. Well, this is the beginning of the up move, right? So larger pullbacks than anything we've seen so far. We see that here, even though it may close on the high. And this count comes, by the way, after some effort versus result last month, right? The high volume, the narrower range, the clustered close off of the high, and then some supply came in. So that makes some sense. All right, let's turn to the weekly. And we'll see that supply. In fact, you can see it right in here on the down move with the increased volume. I highlighted that. But before we get to that, let's just take a look at the weekly chart. Such a good looking chart, right? Joe DiNapoli used to say a chart like this would look pretty, meaning that it's really comporting to Wyckoff principles, right? We're in a nice trend run up, we're holding support, we pull back and we come back up above this key level, and it looks pretty. In other words, it looks symmetrical. Anyway, 2 weeks ago, the market fell underneath the 53.33 and a quarter line here. This was important because this was resistance earlier. And if we had broken that, we would expect the market to continue to go down. But instead, the weekly flushed, broke down below 53.33, flushed down, and then rallied back up above it, and breaking it as resistance as it did and as it closed the week before last. And also this week, not only did we hold 53, but we're also pushing up above the monthly supply line. This is just extended back from October of 2022, I believe. So we're breaking resistance on the way up. That's strong, right? And so remember, on the monthly, we talked a little bit about supply coming in, right, and entering. So we see that, and I've highlighted it here with the red S, picking up these 3 weeks. You can see the heavy volume that came in. And so we see the heaviest volume coming in to the downside here. So somebody was selling, right? Now, somebody was selling large amounts of stock or here contracts. So we note this as it is likely to come into play in the coming weeks. But for the moment, the weekly is strong, and we go with the current strength of the moment, right, on the weekly. So let's take a look at the daily. And we can see that the daily has had a robust rally. I note 7 days up in a row, and that's fairly rare. We don't typically see that. Occasionally we do, but it is rare. And while it can continue up to 8, 9, 10, 11 days in a row or more, you know, the odds start to increase. The odds are building for a pullback of some sort. So we want to be aware that we're vulnerable now to a pullback just because of the number of days up that we've had. Nevertheless, buyers are still in control, right? Well, let's and obviously so. All right, so let's tape read from Monday here. And Monday we painted the second NR6 day in a row. NR6 means the narrowest range of the last 6 days. It's a key indication of consolidation. Often at the top of a move, we start to see those narrow range bars, and often we will get a reaction. We had a good one here, for example, a narrow range day into the pocket resistance, and that started the downtrend that we just finished up a little bit earlier, a couple of weeks ago. So we note that NR6 day at the top of the rally, and normally we would see that as being vulnerable to a pullback. Now, we discussed this quite a bit in deep practice on Thursday. If you missed that, go back, because that was a pretty good session, I think. We broke not only the 53.33 here, the resistance here, but we also broke the supply line on the daily at that point. We've broken it for 2 days in a row, and then we're holding in here. So even though we're in narrow range, and normally that at the top of a move, and normally that suggests vulnerability, we're breaking resistance here. So there's more strength in this than the narrow range bar suggests. And so here we're just pausing. And so occasionally we do that. Here's another good example where we were at the top of a move, seemingly at the time, and yet we were just pausing. There was more move up to come. So that's what happened here. And then Tuesday, the market responds to the consolidation over these last couple of days, and it responds to the upside. And notice that we're erasing at this point nearly all the selling that was coming in when we broke the 54.30 level here, 54.35 level we talked about Thursday in deep practice. We were almost through that, and notice the volume was fairly light there, right? This is not no demand. This is not no demand. We have to be able to read the market and its structure and what's going on there, and not just pick out price bars and individual price bars and volume kind of at random and say, oh, lower than the prior couple of bars, so it's no demand. No, that's strong demand, just the opposite, right? Wednesday and Thursday, we continue up, again, on fairly light volume. No effort really required to push through the top of the supply here on this bar I'm talking about here, push through the 55.02 low that was painted in July, on July 2nd, push through that level. I honestly thought we were going to see some pullback here because there was confluence between this horizontal resistance and the diagonal. It readjusted the supply line on the daily to this level. And so right in here, there was good confluence, expecting the market to roll back over and come down here. But no, too strong. And it just continues to rally up on Thursday. Then on Friday, we start to see the range narrowing a bit. Not an NR6 day, but the range is starting to narrow. We see that we're not making as much progress coming up from high to high or close to close. So we're starting to see some shortening of the thrust in the price action, in the closes there. And that's not a surprise because we're coming into this zone of resistance here. Now, let me just highlight this. And that is from about 55.85 here, which would be this high actually, to 5,600, this 30-point area or this 15-point area, should act as resistance. And so that area, in fact, 5,600 to 55.85 is our resistance area for next week. Again, we've been up 7 straight days in a row, so a pullback can come at any point at this stage. And if we do pull back, I'd be looking for this area here, 54.40, 54.42. I'd be looking for this area to hold. So Friday's low, that's going to be a key level for us, right? If we come down and flush that and close back up above it on Monday, Tuesday, that could be potentially a good long opportunity for us, right? So we may see a couple of consolidation days that occur in here between 5,600 and 55.40 area, give or take, right? So, and as I say, flushes and recoveries early in the week would potentially be positive. Potentially, we have to see what it looks like on the smaller time frame, of course. Now, a break of 55.42, which would not be a surprise because we've been up 7 days in a row and we may start losing support here. And if we lost this support by closing underneath, that's a key indication that would set the market up for a larger pullback, most likely back into the 5,500 area, right? Back into this area. So I'd be looking for that for support to come in, maybe down, maybe we head back down to 54.85 in this area here. Let's erase this, be a little clearer. So 5,500 down, maybe just a little bit more. So into this area in here, I'd be looking for the market to start to hold here. Going lower than this puts the market back down into the downtrend channel and most likely a greater move down. I'd be thinking about maybe 54.25 down in this area somewhere, maybe to 5,400. Okay. And by the way, the level there, I'm looking at Wednesday's high here. Wednesday's high to 5,500. That's the area. Would want to try to see this market hold if it comes down. Obviously, we've got a widespread bar up. Breaking that low would be putting this market, it would be suggesting that sellers were coming in. We had a lot of selling in here, right? Sellers are coming in. If it breaks this low, buyers suddenly are losing control, and then we start to head back down. But if we can hold in here, that would be positive. And it wouldn't be a surprise, right, at this point, because this is where the supply starts on these couple of bars, and we've pushed through this. Would not be a surprise to see this market come back down this week and test into that area, finding no supply and then heading back on up. Okay, so that's what's on tap next week. I'm looking for, let's talk a little bit about what happens if this breaks. 5,600 to 55.85 as resistance, and likely pulling back into the areas that we talked about here, 5,500 to 54.85. Now, if we can break up above 5,600, then the next level is 56.30, right? This is where the down move here started. So somewhere in here, I would expect this to hold and then start to pull back. And this pullback, by the way, whichever one it is going to be important, because if we get supply coming in, then we're thinking more about lower prices. If that doesn't happen, then we could easily retest the all-time highs and potentially go higher. All right, so that's how I view next week. Before we end this session, though, let's talk a little bit about, first of all, let's erase everything. Let's talk a little bit about the major markets. everybody's in sync, everybody's bullish here, the S&Ps, the Dow, and the NAS. But I note also that all three are coming into some resistance here in the next couple of days. So we want to be watching that. And we really want to see, what does this pullback do? Does this pullback, is it light and easy, not drawing out a lot of supply? That's my anticipation, but that doesn't necessarily mean that's what's going to happen. We want to watch that and see, and that'll give us a clue for the coming markets. I want to also touch base a little bit on the point and figure charts. We have a 100-point figure chart. This is kind of my intermediate level point and figure. And you can see we have, as we've talked about in the past, we have very good accumulation structure here. We've made it to the projection of 5,500 off of this cause, the initial projection. But we also have a projection up to 5,900. And so far, I'm not seeing, significant distribution coming in here, which would indicate that, we'd be looking to go lower. So far, we're just holding our gains up in here. Let's take a look at the 50 by 100, and we see again the more details of the 100-point structure, right? With projections up to 5,500. We had a couple of projections here. This was a stepping stone count at this point, and it brought us up nicely into the 5,500, and it fulfilled that 100-point figure charts profit objective. But last week, the end of last week, the beginning of this week, end of last week, we have another count here that confirms both two things really. It confirms the test of the all-time highs here. That's one thing that it's confirming, and that's what we're getting now. We're testing that. But it also confirms that 5,900 projection on the 100-point. We have a stepping stone confirming count here up to 6,000. And that's done by taking the level along here. We have 17 figures, each are worth 50 points. That's 850 points. And we would add that to the low here, and that brings us up to 5,600. So we have a stepping stone confirming count to confirm this higher profit target objective. And given the look of the market and the structure and all of that, so far anyway, there's no reason why that can't be hit at this point. As I say, we don't see distribution coming in. And we may start to see that develop along here, but that's going to take time. It's going to take weeks to develop. So we're just going to go from level to level and week to week, and not worry too much about what the bigger picture might look like, except for as it might affect us on our day trading. Okay, so that's what I see for this week. And the coming week, just a reminder, we have our monthly meeting on Monday at 4:30 p.m. Eastern time, right after the close. And last month, excuse me, in July, we started, there's a book called Charting the Stock Market, the Wyckoff Method, and it was edited by Jack Hudson, Jack K. Hudson, H-U-T, I think it is, S-E-N, Hudson. And in that book, David Weiss wrote 2 chapters on trading the bonds. This was back in the 1980s. And they're very, very useful. They're very good, very, very nice chapters. So we're going to finish up with the second chapter on Monday and look and see how David approached the market. And then on Thursday, we have deep practice at our normal time and normal schedule. So I will see you on Monday next week. Have a great rest of the weekend. Enjoy it, and a good trading week next week. And I'll see you on Monday. All right, everyone, take care. Bye-bye.